They promise you it's all about earning your way up. Work hard, save every penny, and climb that ladder to success. The American dream is open to anyone who puts in the effort, right? But if that's really how it works, why is money piling up faster than ever in the hands of a few? Why do the wealthy keep amassing more while the rest of us fall further behind? Back in 1980, the top 1% of Americans held about 7% of the country's total wealth. Now, they control 32%, and it's not because they suddenly became super productive or smarter overnight. No, the rules of the game were changed to funnel money straight to the top. Once you see the real mechanics at play, you'll realize this isn't some random mistake or market glitch. It's intentional. The rich grow richer because the system is stacked in their favor. The rest of us get poorer because every rule, every policy, and every economic shakeup is built to take from the bottom and give to the top. This isn't just about personal wins or losses. It's about a giant machine, a wealth-sucking machine, that's been humming along for decades. And guess what? You're the fuel powering it. Let's dive into the core engine of this machine, the gap between rising asset prices and stuck wages. Since 1971, when President Nixon cut the dollar's tie to gold, the government got the power to create endless money out of nothing. And boy, did they use it, pumping out trillions of dollars. But here's the catch. That fresh cash didn't trickle down to everyday folks like you. It flooded into the financial world, driving up the costs of stocks, bonds, real estate, and everything else the wealthy already own. If you had assets back in 1980, you were set. Your home might have tripled in value. Your stock investments could have skyrocketed. Your rental properties turned into gold mines. But if your only asset was your time, your skills and labor, you were left in the dust. Wages hardly budged. From 1980 to 2020, workers got 70% more productive, creating way more value than before. Company profits shot up over 400%. Yet real wages, after adjusting for inflation, only rose about 10%. Picture this. You're working 70% harder and smarter than your parents did, producing tons more, but your paycheck is basically the same. Where did that extra 60% of value go? Right to the top, to shareholders, big bosses, and asset owners. Think of it like this. Imagine you're a factory worker making widgets. You figure out a way to make twice as many widgets in the same time, saving the company a fortune. But instead of getting a big raise, the boss pockets the savings and buys more machines. You keep getting the same pay while the company's profits explode. That's what's happening on a massive scale. Take CEOs as a clear example. In 1980, the average top executive earned about 40 times what a typical worker did. Today, it's over 350 times. And it's not because CEOs became 10 times better at their jobs. Nope. Their pay shifted from straight salaries to stock options. And those stocks? They've ballooned in value thanks to all that printed money, stock buybacks, and clever financial tricks. Meanwhile, the workers who actually make the products, serve the customers, and bring in the revenue, they still get hourly pay that barely keeps pace with rising costs. This is wealth being pulled out by design. The folks at the top rework their pay to ride the wave of asset price hikes. Those at the bottom are stuck with wages that always lose out to assets in an inflation-fueled world. Now let's talk about borrowing money, because this is where things get really unfair. Wealthy people can borrow at rock-bottom rates like 3%, while everyday folks pay sky-high rates like 23%. That gap builds huge fortunes for one group and traps the other in endless debt. If you're rich and have property or assets as backup, banks lend to you at super low rates. You might get a 3% mortgage to buy rental homes, or a 4% loan to grow your business. You could even borrow against your stocks at 2% to buy more investments. And since asset prices are climbing faster than your interest, you actually make money just by borrowing. That's how the rich turn debt into wealth. They borrow cheap, let rising prices and inflation cover the costs, and keep the profits. But if you're not wealthy and lack assets, borrowing turns into a nightmare. You need a car for work, so you take a 12% loan. Your furnace breaks in winter, so you charge it at 23% on a credit card. You want to go to college, so you rack up student loans that haunt you forever. Every time you borrow, you're paying a huge extra fee just for being on the lower end. And that interest? It's pure profit for the banks, flowing up to their owners and executives. Let's break it down with numbers. A wealthy person borrows $1 million at 3% to buy an investment property. Their yearly interest bill is just $30,000, but the property's value might jump 5% a year. That's $50,000 in gains. So they're pocketing $20,000 annually just from borrowing. Now, a regular person borrows $20,000 on credit cards at 23%. Their interest alone eats up $4,600 a year, and they're not buying something that appreciates. They're covering groceries or car fixes, things that lose value or vanish. The rich get rewarded for borrowing. The rest get drained. This interest rate trap is one of the strongest ways wealth moves upward. Next, let's look at taxes, where the system legally steals from you. The tax rules are crafted by and for the rich, taxing your work, not their wealth. If you earn a living through labor, you pay income taxes. Federal, state, local. It adds up to about 30% of your earnings. But if you're wealthy and your money comes from investments, you pay capital gains tax, which maxes out at 20%. You're already paying less. And for the ultra-rich, it gets even better. They dodge capital gains altogether with a trick called buy, borrow, die. Here's how it works. You own stocks worth $100 million. Instead of selling and paying taxes, you borrow against them. Banks lend you $20 million at low rates, using the stocks as security. You live off that borrowed cash, and since it's a loan, it's not taxed. No income tax, no capital gains. When you pass away, your heirs get the stocks at a stepped-up value, reset to today's price. They sell and pay zero taxes, then use the money to clear your loans. The whole fortune passes on tax-free. That's why billionaires often pay lower effective rates than their assistants. It's legal, it's common, and only the super-rich can do it. Meanwhile, you get taxed on every earned dollar. You can't borrow against future wages at 2%. You can't hand your income to kids tax-free. You're hit hardest on the most vulnerable kind of wealth, your labor. And that's on purpose, because work can't be hidden overseas or in fancy trusts. You show up, you toil, you get taxed, and the cash flows up. To see this pattern in action, let's rewind to the Gilded Age, from 1870 to 1900. A few industrial giants like Rockefeller, Carnegie, Morgan, and Vanderbilt built fortunes so huge they controlled whole industries. Oil, steel, banking, railroads. They owned America's backbone, and everyone else just worked for them. Pay was low, conditions awful, child labor rampant. No safety rules, no minimum wage, no extra pay for overtime. When workers tried to band together for better deals, the rich hired private armies to crush them. Groups like the Pinkertons used guns to shoot strikers in the streets. This wasn't true free market competition. It was like feudal lords running factories, with wealth hoarded at levels unseen since old European nobility. It took years of worker fights, strikes, and government action to break up the monopolies and create balance. The New Deal, labor unions, and fair taxes all aimed to stop wealth from piling up so much it wrecked democracy. And for a time, it worked. From 1945 to 1980, inequality dropped. The middle class expanded. Wages kept up with productivity. It was America's most equal economic era. But then, starting in 1980, policies flipped to favor money over workers. Tax breaks for the rich, weakening unions, loosening financial rules, and shipping jobs abroad. All of it blew up the wealth gap. We're back to Gilded Age extremes. The rich now own a bigger slice than in 1929, just before the Great Depression. And like back then, they're using their money to buy political clout, squash worker groups, and rewrite rules for themselves. History is looping, but today's tools are sneakier. Rockefeller used monopolies and guns. Modern billionaires use offshore tax havens and lobbyists. Same outcome. Wealth rises, power centralizes, and the rest lag behind. Now, let's discuss economic downturns, because that's when wealth shifts speeds up. Every major crisis in recent history has boosted the rich and hurt the poor. Take 2008. Banks gambled with home loans, created risky investments, and almost wrecked the world economy. Millions lost homes, jobs, and savings. Foreclosures wrecked neighborhoods. Retirement funds halved. It was the worst since the Great Depression. What about the culprits? They got rescued. The government printed trillions and handed it to banks. Your tax dollars went to Wall Street, who then snapped up foreclosed homes for bargain prices. Firms like Blackstone, private equity groups, and hedge funds grabbed hundreds of thousands of houses while regular people got evicted. Now, those same firms are your landlords, charging rent on what used to be your home. The 2008 meltdown was the biggest wealth grab in U.S. history, funded by you. Then came 2020. The pandemic shut things down, and the government printed $6 trillion to prop it up. Some went to stimulus checks, maybe $1,200 or $2,000 if you were lucky. But most flooded corporations and markets. Stocks crashed in March 2020, but by June, they were back. By year's end, they hit records. How? The Federal Reserve poured trillions in, buying bonds, boosting asset prices, and keeping rates at zero. If you own stocks, you got richer. The top Americans added over $1 trillion to their wealth during the pandemic. Billionaires' best year ever. Meanwhile, millions lost jobs. Small shops closed for good. Renters fell behind and faced eviction. Inflation kicked in, eroding savings. Again, the crisis enriched the top and impoverished the rest, all with printed money that juiced assets while squeezing buying power. See the script? Something breaks. Government intervenes. Money gets created. It rushes to the top. Asset values bounce back or soar. But wages stay flat. Jobs don't return. The bottom ends up with more debt, higher prices, and less than before. This isn't a system flaw. It's the system in action. Crises are chances for wealth transfers, and those in charge know it. Let's add compound growth to the mix, because this is the math that drives inequality. Start with $1 million earning 8% yearly, and in 10 years, it's $2.1 million. In 20, $4.6 million. In 30, $10 million. You didn't lift a finger, just owned assets and let them grow. But if you start with nothing, relying on labor, you get linear pay. Work, get paid, stop, money stops. No growth multiplier. And inflation chips away at your spending power annually. So, the divide between you and the millionaire widens, not due to smarts or effort, but pure math. Compound growth on assets always beats straight labor income. That's why family inheritances matter so much. Generational wealth is tough to beat. If your parents left you nothing, you're at zero. Even saving hard and investing smart won't catch you up to someone starting with $1 million. The numbers just don't allow it. Now, throw in inflation. The government prints money which hikes asset prices. Homes, stocks, gold, everything rises. If you own them, you get wealthier. If not, if you're trying to buy your first home or save for later, costs just keep climbing. You're shut out, and the gap grows. That's why housing is such a mess. In 1980, a typical home cost about $64,000, while average household income was $21,000. A house was 3 times yearly earnings. Today, median home price is over $400,000. Income around $75,000. Over 5 times earnings. Worse, mortgage rates were high at 13% in 1980. But homes were affordable, so you paid off fast. Now rates are lower at 4%, but prices are so high that monthly payments crush you, and you'll pay for 30 years, building equity slowly. Meanwhile, existing homeowners watch their net worth skyrocket. They bought cheap. Now it's worth millions. They did nothing. The system inflated their holdings. Here's the harsh reality. The system rewards starting with money and punishes starting with just your effort. Capital gets cheap loans, light taxes, and compounding growth. Labor gets pricey borrowing, heavy taxes, and flat pay. Capital thrives on inflation. Labor suffers. Capital moves freely to low-tax spots. Labor is stuck. You can't relocate to dodge taxes. Every rule, policy, and crisis response protects capital and drains labor. And the capital owners. They write the rules, fund politicians, control the media, shape the story. So you're told inequality is about merit, hustle, and choices. But it's really a system that favors ownership and penalizes work. What can you do? First, realize you can't out-earn a rigged setup. Grinding harder won't make you wealthy if the system siphons your output elsewhere. Focus on owning assets, not just earning. Second, see debt as a tool against you. High-cost debt keeps you down. Low-cost debt, if accessible, can build wealth, but the system reserves it for the already rich. Third, taxes aren't fair. They're tilted toward wealth. Learn the loopholes or get expert help, because the rich exploit them all. Fourth, crises are wealth transfer moments. The next one will come, and assets will be cheap. If you have cash or credit, buy in. If not, you'll sell at a loss. Fifth, generational wealth counts. If you didn't inherit it, build it now by sacrificing to accumulate compounding assets. History repeats this cycle. Wealth clusters, rich get richer, poor get poorer. It happened in ancient Rome, feudal Europe, the Gilded Age, and now. Reversals only came when workers united, fought, and forced change. Like the labor movements, New Deal, and post-war boom. None were handed out. Now, those wins are eroding. Unions weaken. Rich pay less tax. Wages stall. Wealth concentrates faster. We're sliding toward a neo-feudal world, where elites own everything and the rest rent, borrow, and labor till death. Unless we wake up and demand better. But most won't, Because the system distracts, divides, and keeps us desperate. Working double shifts, drowning in debt, surviving day to day. That's how they like it. A struggling crowd has no energy to push back. History's patterns are clear. The rich win because the system concentrates wealth. The poor lose because every lever, credit, taxes, inflation, crises, pulls from below and pushes to the top. This isn't a glitch. It's the core feature. Until you grasp that, you'll keep playing a losing game. If this opened your eyes, subscribe for more. History holds the keys. I'll show you where to find them.